So for more on the new Bank of England governor, we're joined by Randall Kroszner. He's former Fed governor and Chicago Booth School professor. He's also familiar with the incoming BOE governor, Andrew Bailey. And still with us, David Herro of Harris Associates. Randy, we were lucky enough because actually he was a regular for a long time on Bloomberg Surveillance. And the one question I think that markets are still asking is that was he chosen because he wasn't pro-Remain, or he didn't give a sense that he would weigh in on the pros and cons of Brexit?
Well, I think exactly as Sajeev had said, Andrew is someone who is unbelievably competent. He has enormous amounts of experience. He's got a PhD in economics, and so he has a very strong analytical framework. And I think he just hasn't taken a position on Brexit. I think he's someone who, as Bank of England governor, is going to stuff happens, whether it's Brexit, whether it's a cyber attack, whether it's a trade war, and he's going to deal with it. He's not going to try to change the way the world is. He's going to deal with the world and then try to use monetary policy to make it better. What
would be the most difficult thing in this post-Brexit transition? So we don't really still understand what the intent of Prime Minister Johnson is in negotiating a future relationship with the EU.
Yeah, this is one of the big challenges because somehow people think that January 31st, everything's going to be settled. And it's exactly the opposite. Really, what it is, it's the starting point for the transition. Now, the transition on everything, whether it's trade, financial services, and such. And so there's going to be a lot of uncertainty over the next year. And I think that's going to be a really key thing that he's going to have to deal with. And certainly negotiating the financial services agreement is super important.
David, the fact that we have more certainty that at least the UK, will have this withdrawal agreement pushed through because of the Boris Johnson majority, does it make you more likely to invest in UK stocks?
I think the result of the election probably makes one more likely because there was this huge risk factor. You don't want to own anything if a Jeremy Corbyn or that wing of the party is in control. I mean, they're going to nationalize everything from high-speed internet to, you name it, they were going to nationalize. So you would not have wanted to have been an owner of assets, an owner of companies in that scenario. And that now scenario not only has been put aside, but put aside quite strongly. And I think eventually in the next year or two, this Brexit stuff gets solved one way or the next. But what would have been detrimental would have been a Corbyn government. So with this gone, I think UK assets are a lot more attractive. And the fact, frankly, that they're going to be leaving the EU over the medium and long term also probably makes them more attractive. In the short term, there will be some ripples, but in the medium term, the UK looks probably to be the best place in Europe to invest in from a macro perspective. Now, of course, as value investors, you have to look at price. You have to look at the price you pay for the assets you're getting. That also is a very critical factor for our investment process and procedure.
I think that's exactly right. If you think about the macro approach, having someone like Andrew Bailey, a very steady pair of hands, is exactly what you want because there's going to be a lot of short-term uncertainty, a lot of short-term volatility, and I think he's going to be an excellent person to deal with that.
Randy, I do wonder, too, though, my understanding is he's got about 40 days to prepare for the role, which is less time, I think less than half the time that some of his predecessors have had. Obviously, he's well-versed with what's going on in the UK economy and with Brexit, but nonetheless, it's different when you're actually in the seat. What do you think he has to do and be careful about from day one?
Well, since he has such experience and he's been working at the Bank of England or in the regulatory sector in the UK for decades, it's going to be a relatively easy transition because he's very familiar with the institution and how it works, very familiar with all the policy issues. But I do think the issues of what's going to happen with all the various negotiations that will start at the end of October and trying to understand what kind of shocks those are going to mean for the UK economy as well as for Europe and the rest of the world. I think he also has to be very mindful, especially of what's going to happen in the financial services sector. Financial services is crucial for London. London is still the financial center of Europe, and of course he's going to want to maintain that.
It's interesting, too, in our reporting, Randy, there's some concerns that maybe he wouldn't have gotten the position because of questionable things about his oversight of the financial industry. Specifically, there's been some scandals, and I do wonder, how does that factor in? What needs to be his responsibility and his role in all of that as well?
Well, for sure. One always needs to be responsible for, all of the issues that are going on, but you can never anticipate all of those. Being head of the Financial Conduct Authority, if anything goes wrong in anywhere in the financial sector, it's the responsibility of the FCA to investigate. The challenge is that you can't know everything. There are always going to be some frauds. There are going to be some issues that occur. And so I think it's a little bit unfair to say that it was a challenge of his leadership. I think he's been very responsive. I think he's been proactive. But of course, he's not omniscient. Something is always going to go wrong that a leader won't be able to see. And I think he's a man of incredible integrity and hard work.